Hello and welcome to San Diego Market Watch, where we bring you timely, accurate information about the real estate market here in San Diego County every single week. Today is May 4th, 2023, and May the 4th be with you. Sorry, I had to say it. We are looking at a spring real estate market that has rarely been seen since last spring. The overall numbers of transactions, the volume is a lot lower than it was last year, but the activity is no less frenzied. And that is because the number of homes for sale is dismally low. It's been declining, or it was declining every single week since Thanksgiving until April 5th, when it started to vacillate here a bit. And this is definitely a plateau. We're talking about a swing of less than 100 properties over the last 4 or 5 weeks here. And that is because new listings continue to lag behind pending sales. Although this week, these two are right on top of each other. There were, as of the time I checked anyway, 501 new listings in the last 7 days and 502 pending sales. So pending sales are outpacing new listings by 1 unit in the last 7 days, and the number of closed sales is up from last week, which correlates with this rise in pending sales about 4 weeks ago. So the big question about the market right now is, do the number of pending sales run away from the number of new listings again? Do they stay right on top of each other? Or do new listings begin to exceed pending sales, pushing the number of homes for sale higher, which would provide much needed relief for the San Diego County buyer? If the number of pending sales departs again from this number of new listings, which I kind of expect that it will, we are going to see this number here continue to decline, which is going to be a little better for sellers. At the same time, I am seeing a lot of new listing activity, so it is possible that these two numbers right here could remain very close for the next few weeks, but we will see. Now, interest rates are down over the last 7 days on average, according to Freddie Mac. 6.39 is the 7-day average. The Federal Reserve raised interest rates this week, or raised the prime rate, but the mortgage industry had already factored that in for the most part, so the rate remains pretty stable here, down a little bit from last week. And if indeed the Fed is now done raising rates, as they have indicated, we will see downward pressure on rates, which will cause even more buyer demand. And if we don't get more new listings, we're going to be in a world of hurt here, at least buyers are. So let's hope for some more new listings. We have already talked about this median price number that jumped up from March to April. We will see what it does between April and May. This kind of increase is good for sellers, but concerning because it's somewhat unsustainable. The same way it was last year. Something came along, the interest rate crisis last year came along and just destroyed this all of the median price increase that we had seen in the first half of last year. And if we have a similar run up this year, something's going to come along and interrupt that, because we just cannot have runaway appreciation forever and ever. It doesn't work that way in any financial market, but we will see. And it really all comes down to what happens with these numbers right here. So stay tuned, and we'll see what happens next week here on San Diego Market Watch. If you enjoy this content, please remember to like, share, subscribe, and comment. We're here with you every single week, and we'll be back again next week, probably with the month-over-month update, because the new numbers are coming out any day now. So watch for that, and we will talk to you next week. May the 4th be with you, and happy Cinco de Mayo. Have a great weekend, everybody.